Good morning, everyone. My name is Christelle Coleman. I'm your host for the day. It's the 11th of July, and we are into our 44th episode of InsureTalk. I come to you from a very wet, cold, windy, miserable Cape Town, and the city of storms this past week have definitely been living up to its reputation. And as I was driving early morning in the rain to go and exercise today, you can't help but think about those poor souls who are exposed to the elements out on the streets, the workers here in the city of Cape Town busy cutting down trees and cleaning away the debris in the rainwater pipes. And I was thinking about our InsureTalk44 episode today, and I again thought about the importance of insurance, the noble purpose of insurance, because we as insurers, underwriters, brokers, of course reinsurers, we lie awake at night when these storms happen, and we think about how we're going to respond the next day. Weather services have become a lot more accurate at predicting, so we now have pre-storm stress as well. And that's why it's so important that when you do choose your risk partner, whether it is broker, insurer, or underwriter, that you choose a partner that can really step in and restore the livelihoods of those people affected by the storms, of course, those people that are insured. So for me, this past week, the storm really reminded me of the purpose of what we have in this industry. And at the forefront of reinstating people's lives is our headline sponsor for today, Discovery Insure. We are very, very grateful to you, because that's the reason why we can host these events without charging our attendees every month. So Discovery Insure, we are very, very grateful for you sponsoring our event today. And as you know, Discovery Insure is one of South Africa's fastest growing short-term insurance companies. It's leading the way in insurance solutions with their state-of-the-art technology and innovations. We know Discovery stands for innovative solutions. And of course, they do car and home insurance, and they want to create a nation of great drivers. And first up, we have someone that is known to most of this industry, to many of you out there. He's a judge on the Insurance Apprentice, and he's the Chief Growth Officer of Discovery Insure, Daryl Greater. Now, Daryl is a proud South African. He lives between Cape Town and Joburg, and the thing that stands out for me of Daryl is that he's the father of twins. He's a gym enthusiast, a dreamer, and he's always striving for better results. And of course, inspired by enormous possibilities the global community has to offer. Before I hand over to Daryl, just to tell you exactly who he is, because it was really interesting to me to realize that Daryl is not just is the Chief Growth Officer at Insure and Vitality Drive International. He's responsible for all distribution elements for the short-term insurance business. And he spent times in claims, procurement, strategy, broker services, business development, and distribution services. So Daryl, we look forward to your talk this morning.
Thank you, Christelle. A big, warm, that's a somewhat ironic and oxymoronic welcome to all of you on the call. It's great to see so many people. I see there's 2,362 people on the call today, so really, really good turnout. I must echo what Christelle mentioned about it being a colder day, but I often myself sensitize myself, since I've been living in Cape Town since 2018, to what cold really is. So when I hear my fellow Cape Townians say it's really cold today and it's 8 degrees, I like to remember when I was living in Pretoria, 6, 7 years old, grade 1, and you're sitting in school shorts at -3. Now that's cold. So, but it's indeed a cold day around the country, but hopefully the content today warms everyone up and we really talk and engage on matters that need clarifying and matters that need reinforcement. I think also, Christelle, mentioned it too, there's a lot of people in need right now across the country, and our hearts go out to those in less fortunate circumstances. We think to the 4,000 people that were displaced, in Cape Town, in the informal settlements, with the severe wind, blowing away shelters, etc. And there's those scenarios around the country. So our hearts go out to those in need. I've got a few slides to share before I hand over to our Chief Analytics Officer, Michael Rudewijk. He's got an excellent presentation, so I think he asked me to go first to make his presentation look even better than what it is. But you'll be really, really fascinated by some of the content that he'll be sharing on the technology and AI space. But without further ado, let me share my presentation. There we go.
Daryl, I don't see it yet. Oh, there it's coming up. Perfect. Thank you so much.
I think the fiber lines are a bit cold in Century City. Okay. So let's get started, and really I'm going to be speaking to you today at a very high level on I guess just where insurance is today in terms of the trends and the events that we're continuing to see in the local market, and then just some factors that really speak about pricing and the climate surrounding reinsurance structures that we're seeing within the local market, and then really the role of advice and our valued broker partners and financial advisors in this current environment that is really really complex. Let's start with the trends. I mean, it goes without saying that that we as insurers, we operating. Sorry, am I still sharing? Can you still see my screen? Okay. As insurers, we're operating in a very complex environment. It's not just about weather and climate change and global warming. I think specifically in South Africa, we've seen some really interesting political developments. And there has been political tension rising, specifically in certain regions more than others. And I'll speak a little bit later about, how is domestic policy potentially going to change and fiscal policy, which is really important for FDI, for investor confidence, and for investment structures and investment plans for financial services providers. I've mentioned, I think just some of the major contributors to us as insurers specifically, and our solvency, and just our cost base is just really what's happening in the markets. So if you consider inflation, not just in South Africa, but across the world, excuse me, that is creating some dynamic changes, which are providing some very interesting, robust discussions in certain boardrooms on just what to do with capital, the best investment structures, reinsurance structures that are evolving, how many insurers and underwriting managers are looking to optimize claims environments based on what interest rates and inflation, as well as the import pressure with exchange rates have done to claims costs specifically. And then Michael will do more justice to the technology part, but technology right now in the last 7 to 8 months is completely different in financial services now with the advances of AI. I think if you just look over the last 6 to 8 months on the progress of artificial technology and what's being done, especially by some insurance companies that are really starting to invest into its downstream potential, there's a massive opportunity, but every coin has two sides. There's equally a material risk as this technology evolves. So, I mean, let's talk about weather for a bit. The frequency and severity of weather events is increasing over time. I mean, that's pretty intuitive. But if you look historically at South African weather in the insurance space, we generally, our attention was alerted to. We knew that we would get hail on the East Rand and the West Rand kind of every September to October. Sometimes far worse than others, but we knew there was always going to be a hailstorm or two. But mostly after spring in Gauteng. But I think, the KZN floods in 2020 really drew attention on how severe South Africa's weather catastrophes could actually be. And since then, we've subsequently seen further flooding. So if you consider, we saw further floods in KZN the year after, 2021, which were again, there was again loss of life and severe property damage. We've seen flooding in regions like George, in the last 3 years, which never used to happen before. And then if you consider the flooding in the Western Cape too, I mean, last year, September, I think it was the Heritage Day holiday weekend, there was severe flooding. And I think in Cape Town specifically, when you consider the mountainous region it is, when the rainfall is severe on the mountains and all that water comes washing down the mountains, and those rivers overflow, the infrastructure just, we've seen, cannot cope with something like that. And then this last week in Cape Town, that's again testament to perhaps what's going to be happening again and again. This slide shows that, I mean, since 2023, since September, there have been numerous events that have continued to impact the insurance industry. And the severity of these events is high, which is equally alarming when you consider that the frequency is starting to increase. I mean, if you just consider Discovery Insure's numbers, the hailstorm of November 2023, and we one insurer in a large market, we're the fifth largest domestic insurance company in South Africa. And for us, our claims were about 143 million just from that hailstorm. So I think when you consider, the collective spend, considering we're the fifth largest and there's many competitors out there, I think you get a sense of the overall cost and what reinsurance pressures there were, following that. So the question is, what is next? Is it going to be even higher frequency and more severe events than what we're seeing now? With the moving in and out of El Nino and El Nino, that obviously creates a lot of weather fluctuations. But what we can confidently say, and I think all the actuaries on the call see, that over the last 5 years, weather-related perils have been the most volatile compared to all other perils. And insurers now need to relook pricing for these catastrophes, considering the frequency. These are no longer unforeseen. These are no longer 1 in 30, 1 in 50-year events. And so, insurers need to relook the pricing for these catastrophes, considering the frequency and also just the rising cost of reinsurance and the cost of reinsurance reinstatements, which is materially different now versus in sort of 10 years ago, post these cat events. So I think we can expect and price for a relative loss ratio for weather events increasing over time. The political environment is somewhat unstable, globally. I mean, if you just look at the slide, politics naturally plays a role in risk and in the risk environment. And in South Africa, look, the government of national unity was arguably the best outcome for South African politics. But there's severe complexity with such a political structure. When diverging parties come together with different strategies, with very different voter promises, that now need to work together, the compromises that follow such coalitions are often difficult to manage and sustain. And sometimes even impossible to get over the line. And I think if you look at examples of local government and municipalities, we've seen that coalition arrangements can be extremely difficult to manage. I think consider the number of mayors Johannesburg has seen over the last 10 years. Consider what's happened in Tshwane and then the Nelson Mandela Bay with the political bickering, the changes to Speaker of the House, the rotation of mayors. So it's extremely complex, such a coalition arrangement long term. And this is not just at a national level, but now this is at a macro. It's not just at a local level. Now this is at a macro national level. So it will be good to see how that plays out in South Africa. But we should be aware of that risk. Naturally, globally, there's the ongoing war that still impacted shipping and impacted various aspects of trade with the ongoing Ukrainian-Russian war. And that's also further led to inflation if you consider the cost pressure with certain manufacturing that happens in Ukraine, and just the sort of transportation of goods to and out of Ukraine, shipping complexities. And then the Middle East conflict is ongoing, which again causes complexity. And let me just go to the next one. When we go next to the sort of economic backdrop, I think many of us on this call have seen ongoing commentary about interest rates, just what's been happening to the rand, what's been happening to the MPC or the Monetary Policy Committee within the Reserve Bank, and what that strategy has been. We've seen an adverse impact on the macroeconomic environment. So interest rates have been sustainably high. There's been persistent depreciation of the rand, albeit there was some relief with the election results and the government of national unity in terms of, that was taken well. by the global community. So there was some respite. But if you look at the rand over the last while, it has been depreciating. Inflation has remained high. And all of these combined factors have actually had a devastating impact on consumers. I think if you look at the Reserve Bank made the decision to increase interest rates, obviously in an effect to reduce inflation. And interest rates have increased significantly over the months. But, this has not helped curb inflation as it used to in prior years and in previous economic cycles, as inflation has remained high. And as a result, the Reserve Bank had pretty much had no choice under the current Monetary Policy Committee fiscal policy to drop interest rates. And overall, this puts stress on the economy and consumers. Because I think if you consider, in South Africa, and I'm stereotyping, so forgive the disclaimer, but there was a lot of irresponsible borrowing post-COVID. With COVID, when interest rates were down, people went a bit mad on debt and they bought things they probably shouldn't have bought. And there were boats and bikes and maybe home loans that they couldn't afford, etc. And when you consider what people were paying for an asset under debt sort of 4 years ago versus now, I mean, it's a huge differential. And that delta in the disposable income has created a lot of stress. And this is not just an SA. I mean, if you look at the US, the Fed has also kept the high interest rates up post higher inflation figures. Many economists and analysts had actually thought that last month the Fed would decrease the rate. They didn't. The Bank of England, similar, has kept interest rates unchanged. Many economists in the UK were thinking that the UK would drop interest rates. I think they last met on the 20th of June, the Monetary Policy Committee. They've kept it unchanged. We do see that the EU Bank has dropped interest rates, and maybe that's a start of something to, within greater Europe and the euro. But US and the Bank of England are massive markets that impact our cost structures in an emerging market. And that's going to continue. These trends are going to continue to put that disposable income under pressure. So I mentioned obviously how the interest rate changes by the Reserve Bank are used to govern not just inflation, but also there's an element of exchange rate stabilization. And as I mentioned, the UK euro were also aggressively increasing the interest rates. But you must consider what that done to the cost of things like auto parts or car parts. And when you consider global inflation going up, so the base cost of a car part, let's just call it a bumper for an example, increasing over time, and then you compound the impact of the South African rand, depreciating on the exchange rate, it just exacerbates that cost structure of the insurer in a very material way. I mean, we had some numbers when, during COVID, when shipping came to a standstill, and many shipping companies sort of offloaded their containers and sold even their containers just to bring in some revenue. The cost of shipping sort of before COVID to get a container from China to US, the most traded route, was about $800-900, right? And then when you look at 2021, there were some months where it cost over $10,000 to move a container from China to the US. So you can just understand it wasn't just about that inflation, the base manufacturing inflation, but the cost of movement and the cost of shipping also massively exacerbated the cost of goods, which directly had an impact on every auto insurer around the world. And Discovery Insure, we were probably one of the first, if not the first insurance company to see the inflation issue on car parts. And within 8 to 12 months thereafter, there was every insurance company around the world was bleating about it, severely complaining, mentioning it in their financial results, and it was a real issue. And this maybe just for context, I think to those on the call that are interested, interest rates are now at a decade high, even when some exchange rates have stabilized. And we know that this is going to continue, specifically in South Africa, for quite some time. So it's good for brokers on the call and for actuaries and R&D teams and product designers that you keep this in mind when you consider the downstream potential of distribution and just what the market can accommodate. Just a little bit more about inflation. I've mentioned that. Let me just get through this slide quickly. The inflation rate obviously increased as we came out of lockdown, just due to increased economic activity, more income and more sort of capital in the system being spent. And reductions in the inflation rate were initially evident. However, inflation, even if you look now, it's above the Reserve Bank's target. Now, everyone on this call should know the Reserve Bank target is 4.5% inflation per annum. So whenever inflation is above 4.5, you can expect a bit of a hiding in terms of interest rates. And this is obviously what has led to this impact on disposable income with that irresponsible borrowing from 3 to 4 years ago when interest rates were lower. And I think just the net impact on insurance specifically, consumers will start to look for cheaper solutions on items they don't see as much value in, not just in insurance, just generally. So if there is a company that's offering vanilla solutions, that company is going to start feeling the price pressure more aggressively now than ever before, and more aggressive. They're going to feel that price pressure far more than a company that differentiates on value and depth of benefits. And that's whether it's financial services or manufacturing. I think that's pretty intuitive. Obviously, Michael Rudovik after me will be spending a lot of time on tech and AI, but there's been a rapid advancement in the personalization technology over the sort of past 5 years, but very aggressively over the last sort of 8 months, where we can see that AI is now being used to personalize the offers that are made to individuals. Really exciting stuff, for brokers and for insurance companies and underwriting managers across the board. So if you look at just AI, what's being used now, I mean, it's pretty basic these days to be using AI for specific characteristics and known shopping behaviors. But this also leads to then privacy concerns, and how intrusive are marketing practices within companies become even more personalized. And I think we've often seen, and marketers on the call will know rather, that personalization is now the 8th P of marketing, right? So and especially the emerging consumer, your younger generation, they deeply value a personalized solution. Deep faking is also possible with what's being used with this advanced technology. And it's the use of this technology that mimics people, which is often used to misrepresent people. And this can lead to far more convincing scams and increases in fraud. And I mean, it's phenomenal. You'll see some of the avatars later in Mike's presentation. But this is some of the reason why some of the banks in South Africa have had to now stop voice verification. There's no point in Daryl Greater's voice now authenticating an Investec bank account, because anyone can download an avatar these days, and you can use my exact voice in 10 minutes of training that avatar and bypass verification. So this is the stuff that comes also at a cost to insurance companies, because now we have to invest, and all financial services providers, we have to now invest in far more stringent and onerous protocols and processes for client and broker verification, just with what's happening on the tech front. So while this comes with the natural opportunity, there's pressure, especially in the financial services environment, to really enhance and embrace this technology, and importantly, sweat these technology assets. Because for an insurance company or an underwriting manager or a brokerage that doesn't start sweating AI assets, your competitors will and are. And they will have that unquestionable competitive advantage over you, and that's going to be severely damning if you compound that effect over the years. But what's also important to note, I think, for any of the HR and sort of human capital professionals on the call, is that what's happening now with AI is very much going to fast track what's happening with the work of tomorrow. And there's this structural importance now of repurposing people and their roles into the future. And I think a lot quicker than what many companies had envisioned. So just quickly, just what's happening in terms of pricing in the climate surrounding reinsurance. It's important for insurers to be nimble naturally and to adjust quickly in response to complex environments. And naturally, FSPs, in the risk industry, we need to remain ahead of these changing weather patterns, like I've mentioned, by adjusting our risk models to take into account the volatile patterns surrounding weather or changes in vehicle theft, trends. It's also very important that we reflect our reinsurance requirements in our models to be priced in a sustainable manner, considering we're seeing where the trends are going. I mean, enough about weather, but if you just look at vehicle theft over the last couple of years, we have seen that the vehicle theft rates in South Africa are continually changing. With criminals now almost starting to prefer certain car brands and models at any given time. And those that, I guess, the criminal market and the black market also has supply and demand, right? The basics of economics. So it's not a continuous trend when it comes to the targets that we see playing out. But obviously, I think most insurance companies in South Africa now have a vehicle high risk or a tier 1 theft risk type vehicle. And so we need to regularly review and update that list of high-risk vehicles to stay ahead of the changing risks that we're seeing. To give you some context, I think many insurance companies would have probably an actual rate of about 0.8% on the theft frequency, 0.7 to 0.1. So let's just say 0.8 of vehicles get stolen, 0.8% of vehicles get stolen per year in South Africa. Where if you look at tier 1 theft vehicles, some insurance companies have reported up to a 20% theft frequency per year in Gauteng specifically. So you can just imagine the impact on pricing and claims expense when, even if you're recovering the cars, let's say you roll out incredible telematics. There's insurance companies now that are seeing the need for more advanced telematics using Sigfox networks versus standardized sort of GSM old school tracking technology. So even if you're doubling your recovery rate, these cars are so stripped that, if you take your average, theft cost or your average theft claim cost for a tier 1 car, when you consider total losses and the high value of, Toyota SUVs as an example, and the cost of repairing a very stripped out vehicle, you're having an average theft cost of sort of 500 to 800,000 at 20% of a frequency versus 0.8%. So you can imagine, as a broker on the call, you can imagine just what that does to the cost structure of insurance. But what is encouraging is that there's various technologies that we're seeing now being released to the market, mechanical solutions for these vehicles, which will start to normalize and dilute that premium requirement to offer that best cover. And then there's the ongoing sort of risk of power surge as load shedding and now load reductions are not confirmed to be over indefinitely. And we need to continue to provide that relevant cover for clients based on their needs. And just to ensure that we're able to assist collectively, whether we're brokers or insurers or UMAs, that we're able to collectively assist the South African consumer with the protection that they need as their exposure and their risk profile evolves. Look, the reinsurance market has hardened. I think for all the brokers on the call, this has probably been a very big contentious issue. I think if you've been a broker for 20, 30 years, I don't think you've probably seen a harder reinsurance market. And not just in terms of pricing and fact placements, but also just in terms of insurer appetite, because reinsurers have been quite stringent on insurers and just what they're willing to reinsure. So the reinsurance market has hardened, and in terms of rates and cover terms for certain risks have become far stricter. I've spoken a little bit about the flood and the storm risk, and specifically in KZN, we've seen various insurers either increasing premiums or restricting cover or amending excess structures or even just removing excess waivers or a combination of all of them. But KZN and the weather exposure there has become a real talking point, I think, in the reinsurance and insurance and risk community. There's also been an increased fire risk, specifically within the sort of thatch segment. And I think the last 18 months have been brutal in terms of thatch losses. And reinsurers, again, have been very prescriptive. That's me being diplomatic with insurers on how they're managing thatch and thatch concentrations and risk mitigation on thatch. And so if you're a customer these days, or if you're someone that owns a game lodge with a thatch roof or just a high valued home, with a thatch room, if you can get the cover, you're going to be expected to pay a lot more for it in years to come. And from a grid perspective, I think the risk is lower now. We've seen that the government and Eskom is able to somewhat well manage the sort of lead up to a potential grid failure. So hence why they impose such onerous load shedding at times. So the grid failure risk is still there, but I think it's well managed. But we do still need to, as an example, watch that exposure. But I think most insurers now have mitigated that risk just in terms of how they've they've amended their exclusion list, and just, the changes to the treaty wordings, and the policy wordings. So the role of distribution and our valued financial advisors and our valued broker partners in this market. So, I mean, we've seen insurance, we know it's generally seen as a grudge purchase, especially for individuals sort of between the ages of 18 and 25, where claims rates are significantly higher. Obviously, I'm speaking about the domestic market here, but it's also, insurance is seen as a grudge purchase even for corporates and companies. No one really wants to pay for insurance. You do it just because you have to. And the changing macroeconomic environment, which I've mentioned, has caused far lower employment numbers. There's far lower disposable income, and there's lower spending based on, and that's intentional, right? Because if there's lower spending, then inflation will come down, which is the Reserve Bank's intention. And in times of financial distress, and I'm stereotyping here, but in times of financial distress, insurance is generally just one of the first items that get cut out and removed from household budgets. However, this is when individuals, if you really think about it, are the most vulnerable and need insurance coverage, as there is simply less capital in the system. The logic is intuitive, right? So when crime rates are higher, you invest in burglar bars or an alarm. Similarly, when an individual has less disposable income or a company has less reserves and capital at play, they should similarly ensure that they have even better insurance coverage, because they currently then cannot simply afford the shock of a loss, as they probably could have when times were better. And that's an important positioning, arrangement, I think, for brokers, because I have full empathy for brokers dealing with a distressed client or a client with limited disposable income, wanting to reduce cover or reduce benefits. But this is probably when they most need really good insurance coverage. And I maybe just some data to substantiate it. Our data has shown that less than 30% of South Africans, less than 30%, have an emergency fund for when something unexpected happens. And that's profound. If this was a number of 90, 100%, then you probably wouldn't need insurance, right? And that's the value to the society as a whole on what we collectively on this call provide as risk solutions to the market. So financial advice is crucial to make sure that people realize what is the protection that they need, especially in tough times, even more so in times like this. It helps us, it also helps to ensure that people purchase the cover that is relevant for them based on their needs and their risk profile and their aspirations. Hence why it's so important that brokers, and Christelle made the point earlier, that brokers need to partner with insurers that have an adequate bouquet of products. So it's not like the broker has to force fit a solution for any segment of the market. There's an adequate bouquet of products. And also that have an emerging and dynamic benefit strategy. If you look globally, there's insurance companies that haven't changed their product design in 20 to 30 years. It's kind of unacceptable if you consider how the risk profile and the risk segment globally has evolved, how the consumer segment has evolved, how people want to engage with products and brands have evolved. And so the very nature of risk has evolved. And so an adequate array of products and risk solutions which enable the broker to not force fit a risk solution is really important, and will become a lot more topical. Traditionally, weather insurance was seen as important for businesses, but with an increase in frequency and severity, it's become a lot more necessary for individuals too. So I think I'm stereotyping across South Africa. I mean, if you look at like sort of buildings premium and buildings coverage on sort of commercial, corporate versus domestic, I think you get where I'm going with this. But it's really, really becoming more important for individuals in domestic cover. And as I've mentioned, these were some of the numbers that we at Discovery Insure saw. And again, we one player in a big market. And we've seen the numerous events leading to the large losses for individual risks, where many homes and private vehicles were damaged. I mean, if you look at the KZN floods, the Western Cape floods, the hailstorm I mentioned in November last year, the cost for the market overall was severe. And an advisor and a broker can greatly assist their clients by explaining the weather risks that are emerging now in South Africa, and the importance of cover. It must also be noted while I speak about, I think, the advice from a broker, and weather-related perils. And again, I'm stereotyping, but SA and South Africans, we're quite apathetic when it comes to maintenance, especially home maintenance. And brokers also need to reaffirm the importance of upkeep and general maintenance to structures, specifically when offering advice on associated insurance. As South Africa actually has some of the highest building claim rejection rates for maintenance and wear and tear issues. So it's important that I think the South African consumers in South Africa knows I should have cover for my home or my building or my factory. But equally so, I need to maintain it to an acceptable level. So financial advisors and brokers, sorry, let me just go back one. The financial advisors can educate obviously clients about risk. We know this. Its complex nature. This is where it becomes less prevalent. Where I'm not sure all conversations in risk committee meetings or in the lounges of people who are being sold insurance. I'm not sure the complexity of risk in South Africa is really pushed home hard enough. And I think if you just look at this slide, I mean, if you're a broker in the room, this is what you've got to deal with, because this is what we're dealing with as insurers and underwriting managers and reinsurers. And it's a difficult and somewhat complex conversation to put all of this in a sales pitch when you're distributing an insurance solution or a risk solution to the client on hand. But these are some of the main points which speak to why insurance is an absolute necessity these days. The insurance environment, like I mentioned, besides it being complex, we're seeing now the value of advice and the value of advisors to the insurance sort of ecosystem, where, again, less capital in the system and higher and more diverse risks. The role of advice now is more important than ever before. Naturally, advisors and brokers must provide the appropriate guidance to clients. And it's important to keep up to date with changing risk environments and to inform clients of how best to manage the risk and tailor their cover to make sure, they get the best protection possible. But it's equally important that brokers and advisors partner with progressive insurers that provide them too with, the necessary product suite. I've mentioned that. That's best of breed. With market and risk relevant insurers that provide technology solutions to brokers and advisors that not just enhance a broker's internal expense, sort of cost structure, but also enhance their workflows. And I think it's also important now more than ever before that brokers also start paying attention to just insurance partners that have developed the expertise into procurement management. If you consider just the impact of imports, inflation, exchange rates, and the impact of what that does to procurement supply chain. With fraud identification, which continues to be a red alert in South Africa, and the impact of costs and effectively premiums, and just partnering with insurers that have got claims optimization to protect the brokers' portfolios loss ratio. It's becoming more and more important. So, very high level update from my side. I thank you again for joining the call. It's been an absolute privilege to speak to you all. I'll look out if there's any sort of questions that I'd like to respond to on the Q&A part of the Zoom call. And over back to the panel. Thank you very much.
Darryl, we really appreciate you sharing your thoughts on the dynamic risks and the impact of insurance. I always say that our speakers have to prepare for these presentations that they do here on InsureTalk every month, and it's no daunting task to present to almost 4,000 insurance professionals. So I know it takes a lot of time and effort out of your day, and we truly appreciate you sharing your insights with us. Next up, and we can't seem to get away from AI and the actuaries. So next up, we have Michael Rudewijk. We have a full panel of Discovery Insure speakers today, so just keep that in mind. We have Discovery Insure as our event partner today, and they've made available to us a number of these of their staff to come and talk to us about their specialist expertise. So Michael Rudewijk is the head of pricing and analytics at Discovery Insure, and that must be quite a job, because we understand Discovery is full of innovation and interesting and different ways of doing things. And he is going to talk to us on how AI is shaping the future of insurance. We've had a number of people talking to us about AI, but I think it would be particularly interesting to hear the viewpoint of Discovery Insure. So he's an ExCo member and he heads up the analytics department. This is Michael. And he's also worked in the business analytics space, spending the first 6 years of his career at Standard Insurance Limited before joining Discovery Insure in 2016. He says he is deeply curious and passionate about understanding the intersection between human psychology and analytical technology. I managed to get those words out. I'm Afrikaans, so that was something that I thought was going to be a tongue twister for me. And he's also dedicated to leveraging these insights to make it easier to make decisions and to drive business success. So, Michael, on that note, we look forward to hear more about how AI is shaping the future of insurance.
Right, thank you. I think AI is one of the most recent trends, which is sometimes it is misunderstood. It is believed that it is very powerful, but what it does is something, what it doesn't do are things that are often misconstrued. So hopefully today I can take you through a little bit of how it really affects us in the insurance space. So what is it? How does it affect us? There are a bunch of considerations that I think we need to be making, which are considerations or concerns, and then where are we going to be moving towards? Okay, so to start off, the big question of what is all the hype about? AI is on basically everybody's lips. The biggest software companies in the world are investing huge amounts of money in it. And it is something that we've heard about for a while. So why all of a sudden is it so different? So just to give you an idea, in the last 2 years, about in January 2022, people used to search AI around about the same amount that they used to search motor insurance. So it used to be relatively similar in terms of popularity on Google search. That has escalated over the last 2 years by about 7 times. People now search more about AI than what they search about the World Wide Web or the internet. And that is how much it's kind of blown up over the recent past. And in truth, like according to like the definition of what AI is, it's been around for a long time already. So AI is essentially just a computer process or model that's calibrated by some data to do things that involve some form of human-like intelligence. And this dates back decades, actually more than 25 years ago, that Deep Blue's computer beat Gary Kasparov, which was the human champion at chess at that time. So beating humans at some of our own games is something that's not a new thing, but there's a big difference now. 25 years ago, when Deep Blue did this, it was really good at doing one thing. And doing one thing is great because we can have a whole bunch of different processes which we can train to provide productive processes. But the key difference now is that these processes are becoming generalized. So for the first time over the last 2 years, AI processes can do generalized tasks that humans could do before. And that is an important part because for the first time now, what we can do is some of these big companies that are on the screen, and they essentially get a pre-trained model that people can start using out of the box. So for a long portion of time, people would have to have their own data. They would have to create a model, and that model would do certain things. But it would need a lot of expertise. It would need a lot of data, and it would need a lot of processing power. Nowadays, you can essentially rent a model that one of the biggest companies in the world would have created. And the reason you can do it is because it does multiple tasks. So you can get one model to become a law expert, or an engineering expert, or an insurance expert. So this stuff all started around about October 2022. OpenAI came out with ChatGPT, and it's the first part that most people, the first time that most people knew about these things. I think it shocked the world, not just kind of industries, but it shocked people from a personal perspective. Before that, most AI processes and that could maybe predict, from a language perspective, it could maybe predict the next word, or 2 words maybe, if the process was really good. But all of a sudden, it didn't just predict the rest of the sentence, it could create a story. That story could be entirely creative. It could seemingly regurgitate facts from the past if it was trained on it. And this took the world by storm, but at that point in time, I think everyone looked at it in a bit of a personal way, that it was cool. You could create a poem, and that was funny, and you could share it with your friends. But what was the usability of it? And for a little while after that, the hype went away for about 4 to 6 months. And soon after that, these companies started creating APIs, which companies could use. And then all of a sudden, they could augment these models with their own data. And that is where AI starts to become very usable for a company. All of the biggest companies in the world invested a lot of money. They started having these huge data centers. NVIDIA's share price went through the roof because all of a sudden the GPU was the most in-demand piece of hardware that you could have. And they created these models then that we can use for all these generalized tasks. Now, what makes it different to the past is that these models can actually fundamentally understand concepts that people can speak about. And that is because essentially majority of the accessible internet was used to train these models. These models are as good as a person who has read the entire internet when it comes to general reasoning about concepts. So the same way that you can think that a ship has an association with a car because they're both forms of transportation, and the same way that you can think that a car has an association with a tire or tar, the model will actually know those things. And it will know what it looks like if you describe it. It will recognize the sound of a car. It can look at a picture and it can know that it's a car. So it understands fundamentally what these things are. And because of that, it can be used in general reasoning. So within AI, there's 2 main kind of categories. So machine learning is probably a term which people have heard in the insurance industry for a decent amount of time. And it is a subset of AI. And in many ways, people don't view it as AI because it can do some things that are almost superhumanly good. It can potentially identify fraud. It can identify a signature with precision that even a signature expert can't do. But it can only do those 1 things in general from machine learning. So this is things that people would know, like a premium engine, a next step recommender, even something like an automatic claims approval. So these are things that I think the insurance industry has learned are around, and they've learned some form of acceptance around them. The second part is natural language processing. Now, this part is the part that has got a lot better in the past. And it's the ability, from an insurance perspective, it's the ability to accept and absorb natural language in communication that you receive. You can automatically trigger those processes to do something next, whether it be something manual by a staff member or whether it be a further automatic process. The other part that it can do, which is the part it's got even better at recently, is that it can generate outwards communication. And that outwards communication is relevant, and if done well, not seemingly different to if a person had done it. So the insurance industry, as it lies at the moment, it is good to unpack it to see how the sector works. So while there are many automatic processes that happen, and there's many elements that are automatic, there are still a large amount of things that happen manually. As an example, even though there might be pricing engines that give automatic premiums, there is still in most companies, there is a large amount of deviation that happens around that in the form of some type of negotiation or discounts. Now, the issue with those processes is that the more they get, the more complex they get, and the more automated they get, they also start to become depersonalized. So wherever these traditional practices move from a person, which would apply like a personal touch, they may be moving towards something that feels automated. It feels generic. It feels like everyone is getting the same type of treatment. Some of the issues with the world as it's getting more complex is that processes need to follow with these complexities, and that then drives some inefficiencies. As an example, fraudulent claims. So a fraudulent clients will find new techniques to defraud insurance companies, and to combat that, there needs to be better and more complex ways to try and find it. There needs to be better and more complex ways to uncover and ensure that the rest of the policyholders are being protected and that they're not eventually paying for all of these costs. Now, that leads to two things. It first leads to rising costs. And the second thing that it leads to is kind of cost inefficiencies. So more staff members need to do more things to achieve that. On the customer's experience side, I guess is the final consideration, which would be if you can order an item online and get it delivered to your doorstep within an hour, this is the kind of experience that people are starting to accept as the norm. And they're having that expectation that why shouldn't every single service have a similar type of experience? So the insurance industry, despite that there are many manual processes, still needs to keep up with where the world's going. And that is where I think some of the benefits of AI come for the insurance industry. So one of the main things, like a key theme that comes with AI as it integrates, is efficiencies. So essentially, AI allows all processes to be done slightly faster, potentially, in many ways to be done slightly better. And that happens because of multiple things. It could happen because that the people that are involved in running these processes are augmented and therefore made more efficient. The second thing that can happen, so as an example of that, instead of logging a claim, when, I don't know, there's 50 fields that need to be filled in, if the incident description is just decoded and auto-populated, who says that somebody needs to repeat something that they've already said? So you give an incident description, but I still have to tell you what peril a claim had to be. These are the types of things that an agent, as an example, would be augmented and would be much more efficient if they were using it. From an underwriting perspective, these discounts, which may be requested in the past, would go through a person. Now, sometimes a person's mailbox or a process before they get to that request may have a delay. What happens if some of these processes could be dealt with immediately? Dealt with immediately, but still the nuances of that motivation would be taken into consideration. This is a slight demonstration that I just wanted to give of how much efficiencies and how advanced the technology is in terms of providing good experience that feels what the client wants to experience, despite kind of behind the scenes, there might actually be kind of less manpower that goes to providing these solutions.
This is AI Daryl. I am an AI avatar, a digital copy created by my human counterpart. I'd like to demonstrate that AI extends beyond chatbots and self-driving cars. While my human counterpart has left this conversation, the technology allows me to be calibrated to continue, even in a live environment. AI has applicability in all areas of the insurance value chain, and we are excited to unpack this further.
All right, so some of that stuff is very scary when you can think that now that I've trained Daryl's avatar, he's left the conversation and I can essentially get him to say whatever I want him to say. And I think very few people would be none the wiser that none of the words that Daryl actually spoke there have possibly been spoken into a training set. But we can use a training set of data to augment a whole bunch of pre-trained data to make it very widely, the use is very wide. All right, and this moves on to kind of our next key theme. So while the first key theme was efficiencies, the next key theme would be service. So AI's ability to deliver much better service, whether it comes into efficiencies or just personalization, those are the two main portions. So as I was talking about earlier, the more that these processes become automated, personalization starts to get lost. But with AI's ability to use the nuances that happen with every single person, we can bring a level of experience that would only have been done when a person is given that human touch. That same level of kind of empathy would be given, but now it can be done in bulk. It can be done to achieve that same experience, that same feeling that a client would leave. That happens both in terms of that personalization, but the second part would be accessibility. So while we have, I don't know, plan guides and policy documents that outline a lot of different things that are in an insurance contract, the accessibility is not always the easiest thing. So if you have a question, figuring out that it's, I don't know, clause 52 or 57 that is actually applying is sometimes quite difficult. So from an accessibility perspective, whether it's the understanding of a policy wording or whether it's the ability to get the right data. So as an example, instead of going into an administration system that would that you have to go kind of 3 screens deep to try and find some information, imagine every service agent had the ability to search a topic and get all the relevant information about that topic. And the relevance of that topic might be, the relevance of that topic is very unique to this question. So the context of that question might give you something quite different, which is specific to this client. All right, so this is an example of what, from a personal nature, I started feeling when I was using AI, from a professional nature in a very similar way. And this happens through some very easy tasks. So a lot of people think of AI just being potentially like a ChatGPT chatbot, or they think of it being an engine that is doing something in the background that's not really accessible. But really, if you think of how majority of staff members that are involved in insurance companies do their work, a large amount of that time collectively from those staff members can actually be enhanced. As an example, every single time I draft an email, do I really have to draft it from scratch? Or if I have, I don't know, a one-liner that I can do that gives the general context, the feeling that I have, the intention and goal that I want to achieve with an email, and AI can use that in addition to the context it's seen from previous emails, then it can make me, I don't know, 50% more efficient at dealing with emails. A similar type of thing can happen with summarizing of notes. So if you need to read something, instead of reading the entire thing, you can ask for a summary. But sometimes that is, if you want a summary with specific context, so there's specific things that you're interested in, you could get an AI application to essentially give you a summary that's answering all the things that are relevant to you. Sometimes you don't even have to know the questions you need to ask. You can just give it your context, like where do you come from? What are you interested in? What do you want to achieve? And it will find the necessary things without you having any context of the piece of work that you are working on. All right, so there are a bunch of use cases that Discovery has done in the past that have AI integration. We're not going to unpack all of the ones that are happening in the future, but it's very clear that AI has played a part. And my final part over here gives us a good idea of where we're going in the future. So Discovery Health, personal pathways, like I was saying earlier, if every single client is getting a experience which is personal to them and not generic, we have proven that that leads to better behavior thereafter. So while it's been done in Discovery Health, recommendation engines with next best actions are a very important part of most insurance companies. AI Quote is an application which Discovery used, which uses competitor schedules. The schedule of a competitor can just be scanned in, and instead of answering all the same questions that have been asked before, an AI quote can extract that information and create a quote itself. From a pothole patrol perspective, pothole patrol has only a limited amount of capacity, so utilizing that capacity well and making sure that routes are done in the right way, and that the correct potholes are prioritized and addressed is very important. That needs a whole bunch of unstructured problems to happen. So firstly, people will be highlighting that there are potholes to start, but then also to figure out when they're actually correct, when they are fixed, whether done by pothole patrol or the government. Obviously, those would then need to be taken out of the equation to make sure that efficiency is upheld. Ask Discovery. So this is a chatbot which addresses a bunch of questions. In the past, Ask Discovery has been using the technology that was available of the previous generation. And obviously, as chatbots technology gets enhanced, this becomes almost one of the most important interfaces of the future, where it would be much easier to ask a quick question on WhatsApp, get the correct answer, than to phone a call center, as an example. And then the final part is, like I was saying earlier, with summarizing of information that you need to do, or whether it is creating emails. The theme of the future for employers would be that each employee essentially has their own smart assistant. Think of everyone, I don't know, think of a CEO that has an executive assistant that potentially looks at many of their emails, filters out the ones that they shouldn't see, highlights the ones that they should see. Now imagine every single person having their own executive assistant that's helping them achieve what they need to do throughout the day. That is going to be the future of working, and it's going to develop some skills that are going to be that are important now, but will be more important going forward. And that's almost management skills. So being able to give good description, to give good direction, and to identify when things will be going, when you want to actually have more influence, is going to be a skill that working with AI is going to have even more. So people that have never managed people are going to start to develop, have to start to develop those skills to start being effective in an AI world. All right, so AI is doing really good things for the industry. Kind of, what are the problems? What are the holdbacks? The things that are holding everyone back from doing it? And there are a couple. So the first thing would be some of the bias in the algorithms. So as I previously said, the algorithms that we're looking for are basically trained on every text, like every word that is on the internet that is actually accessible. Now, from a bias perspective, we've also got to realize that if we look at the small part of the entire internet that was generated from South Africans, you've got to start to see that there's going to be a bias, and that South African culture, South African views on different points are potentially not going to be prominent in all of the responses that these AI systems do. So it's very important to be able to kind of negate the biases and to make sure that they're being allowed for in all the applications that are being done. All right, and that might be language. So while some of these models are very good with multiple languages, including South African languages, not all of them would be, and that needs to be something that needs to be considered. From a privacy perspective, the US is kind of the powerhouse of AI. The US also does not have as strict privacy restrictions as we do in South Africa and in Europe, and therefore giving any of our personal information into an application that the servers would be in the US is essentially against POPI and is definitely a concern. From a transparency and accountability perspective, there is actually a decent amount of legislation around AI, and part of that does require that if AI is involved in any of these automatic decision processes, that there is a very easy escalation process that would eventually get to a human. So transparency is key, accountability is key, but so is escalations and the ability to resolve a problem that potentially in AI that doesn't have a clear explanation around how it made a decision. You need to be able to overturn that. Yeah, some of the other data challenges for the insurance industry as a whole, again, similar to what I think AI can and can't do, there are some people that think that AI applications are superhuman. And in general, they're not. AI can do, because it's trained on what humans can do on the internet, it can do up to what humans can do. And that will get better over time. So at the moment, maybe it is trained to a grade 10 to a matric level in some applications. In some specific ones, maybe a little bit better. But if you've got an unstructured, closet full of files, it essentially cannot just find everything in an unstructured closet full of files. So the data quality and the availability, the speed in which in which kind of files can be used, those are all important portions that enhance the ability to AI to actually be useful in the first place. That is obviously going to be a big stumbling block for many companies that are trying to implement this and implement it well. Integration with legacy systems is an obvious part, but the bigger part here would be the skill gap. And so the skill gap in the applications, but also then the considerations that we have to do with existing employees. So the skill gap in applications, I've looked at a whole bunch of CVs where people do claim to be absolute experts in large language models, which is the underlying model supporting most of these AI applications. And quite frankly, not much of that can be possible because most of these AI models, they were first done in 2017, 2018, but they were mainly only adopted in the last 2 years. So this is a very, very new kind of expertise. And even within the consulting space, a lot of companies would go to the consulting spaces to try and get expertise and get people that have tried and tested certain things. But in a space where majority of even consulting companies have only potentially done 1 or 2 implementations, they're not going to give as much certainty that they know the nuances, the places that you can be wrong, all the problems that have been done, and can give direction because it's a very new space that we're working in. Specifically, the parts that that people are interested in most recently. The greater AI when it comes to machine learning, obviously we have data science experts that have been in the industry for a long time. In terms of current employees, some of the fears that people have around AI, I think it's very clear that in the short term, the biggest part is that employees are going to be enhanced with AI. They're not going to be replaced by AI. So in the short term, everyone is going to be getting a lot more efficient. They are going to be able to achieve their jobs better. They should be feeling enriched. And then the next part that comes with that is the ability to adapt as it happens. So one of the relatively famous saying that in the AI industry is that AI is not going to take your job, but somebody that's working with AI just might. And that is an important thing, that over the next 5 years, people are going to have to transition out of a job that potentially doesn't use AI to be a big user of AI to achieve their job. So there's going to be a transition period. And since, I don't know, probably the most recent big change that was similar was when the World Wide Web came out. Before that was maybe like software, like Windows compared to DOS. It is a drastic change that has happened. With that, there is going to be an adoption that needs to happen where people are going to have to adapt their skills, learn new things. But the fact that kind of jobs are going to disappear, I think, is not going to be something. I think they're going to transition from one job to another over time. Right, and then the last part is, where's the future going in for AI? And I think it is very clear if you look at some of the major players here. Text is only one of the things that it's good at. It's very good at vision. It's very good at audio, and the future might bring something. Google's already got a context window of 2 million tokens that it can look at. Essentially, you could put an entire video in there and just ask it something very specific that happened in a theme. Like, I don't know, somebody put a newspaper in their pocket. What was the date on that newspaper? And it would be able to answer you. So we're going to a place with very multimodal inputs and outputs. So instead of, it's already got to the place where instead of going from words to text, text to solve a problem, text back to words, if you get an answer, this would all be done in one. The last part would be kind of agents. So the world is going to be that while these things have a single model, they're going to very quickly go towards almost like a committee of AI agents to solve different problems. Each of them would be kind of focusing on different things. Right, so just to recap, AI is absolutely a big change. It's a shift in something that's happened. While everyone has known about it for a long time, AI as a concept, AI as we know it is something new. It has got large impacts and that it is going to have within the insurance industry. They essentially all lead towards better customer service, faster customer service, lower expenses to achieve that, which then generally leads to lower premiums in the same space. And then just as a final part, I just wanted to show something that while everyone's generating presentations, this is a good concept to show how much easier the world is becoming at doing a presentation or text or anything. I've given a quick demonstration.
Let's say you're getting ready for your customer pitch meeting. Everyone has had a moment when they wish they could turn their proposal into a customer-ready presentation without having to start from scratch. Now you can. Using just your own words, Copilot can translate Word into PowerPoint. You can also translate PowerPoint into Word. Now you have a professional-looking presentation that you can hone and polish. Let's say you want to add a slide. Give Copilot some quick instructions. There it goes, ready for you to review. So this slide is too wordy. Let's ask Copilot to make it more visual. Give it a few seconds. And check this out. Copilot can even animate the slide. It gives it a professional design treatment in a single click. But it doesn't stop there.
Right. Thank you everyone for listening to me today. I definitely appreciate the time. And over back to the team. I'd be more than happy to look through the comments and to get back to anybody.
Michael, yeah, thank you so much for presenting us with your wisdom and insights. I saw a quote the other day about, I don't want AI to do my work for me, but my housework or something like that. So it's very interesting to see where we're going with this whole artificial intelligence innovations that's coming out and how it's going to shape our future, as you rightly said. So again, I just want to thank Discovery Insure, and I just wanted to mention something to you, our participants around this virtual roundtable. We exist because you tune in every month, and you watch it afterwards online, we've noticed. We know that CPD is a big driving factor of you attending this conference. We'd like to think it's because we have the best lineup of speakers and that we keep it interesting. We are definitely collectively the biggest digital insurance conference on the African continent, and we think maybe even in the world. So it's something really special, really, really special to be involved in. So we appreciate you for joining us here each month. We've got some super fans out there, and I think at some point we need to start recognizing them. That would be really interesting. But just on the CPD points, please remember that you will get your certificate. If you're an IISA member, it will be automatically uploaded to your IISA portal. One of the many benefits of being a member of the Insurance Institute of South Africa, a professional member or an associate or a fellow. So please go onto the IISA website and find out a little bit more about how to become a member. And it's really good value for money, and it adds to the substance of your profile as a professional individual in this industry, and it's open to everyone. But speaking of the IISA, and one of the reasons why we have our conference, our InsureTalk conference a little bit earlier this month, is we are gearing up at last to the African Insurance Exchange at Sun City. And next up, we have Thokozile Mashlangu, who's going to tell us a bit more about everything that they're busy with. And as usual, give us a little bit of an update from the IISA. Thank you very much.
Good morning, ladies and gentlemen. In today's update, I'm going to touch on 5 items. The first one being the AIE 2024, the 50th conference we have been celebrating. If you have not registered, you still have an opportunity to do so. Do so before we close registration. And as I have shared on this platform and many others, that this year's conference is one not to be missed. So do take the opportunity before registration closes. By virtue of being a conference delegate, you have access to all the social events. The first one being the welcome cocktail, which will take place on the Sunday, and then the gala dinner will take place on the Tuesday. At the gala dinner, we will be recognizing some stalwarts that have contributed to the ISA where it is today, and we'll also recognize certain organizations that have socially significant initiatives beyond the normal CSI initiatives. We will also be recognizing the usual top academic achievers as well. And then the evening will finish off with entertainment by Lady Zama. So you don't want to miss that. On Tuesday, we will have full business sessions and then have a closing talk by Sia Kuza, a rocket scientist. And this young man is a young man you don't want to miss. You want to sit and listen to what he has to share with us. And then we will have a closing party which will start at 8 p.m. into the evening. So you sure don't want to miss this conference. You don't want to miss this conference. Make sure that you are registered. I also want to share with you finally that this year we are bringing 7 to broadcast on site while the conference is happening. And this will happen in the first few hours of day 1 of the conference. That's the Monday of the business session. And a big thank you to I2, CN&CO, Standard Bank Insurance Brokers, as well as ABSA Insurance for making it possible for us to bring a 702 to come broadcast on site. So be sure to engage with the team while they're on site. They will be capturing the vibe, they will be capturing the excitement and sharing it with the 702 listeners. That's another way we're making the 50th conference different from the others that we have done. I then want to move on to a request that has been made by members who have not been able to pay the full amount of membership fees once off. So I have shared, I think last year towards the end of the year when we had the in-person session, that we will be introducing a debit order facility. So in partnership with Fulcrum, we have done so. The debit order facility is already available. We went live in April. So take advantage of that if you're a member and you don't have the funds to pay the membership fee upfront, the full amount. Or if you're not a member and that has been a barrier for you to become a professional member, take advantage of the debit order facility. We really would like to have you on board and make sure that you are an accredited professional, and we're making it easy by making the debit order facility available. We've also successfully launched the second cohort of what we call the YAP, the Youth Accelerator Program, which is a work readiness program that I have shared about as well in this platform as well as on radio. And this is focused on creating a pool of skilled professionals that the industry can recruit from. And these are young, bright minds that undergo a blended learning approach. At the end of the program, they will have an NQF level 5 and they will have experience as well. And we are calling out corporates, insurers, brokers, underwriting managers to host these young people and give them an exposure into the true work of insurance in various areas of insurance. So that cohort will be starting in the next 3 weeks, and we really look forward to continue making a difference in the young people's lives, but also contributing to skills development in the industry. We are continuing with the ISA webinars and seminars, and these are made available for free at no cost to members. So take advantage of these sessions and make sure that you elevate and enhance your knowledge base as well as acquiring your CPD hours while you're doing that. We also have tailor-made or customized skills development programs that we make available. So if your organization is looking for a customized program, particularly for your organization as a professional body that is focused on professional development, we do make those customized programs available. I want to close off by saying, as part of the skills development, we also make valuable contribution towards our corporate partners. As a corporate partner, if you're an employee of a corporate partner, you may be nominated to undergo one of the programs that we make available. We recently invited corporate partners to nominate their employees to undergo the certificate in digital insurance. We have 45 individuals that are undergoing that development, and it's really one of the programs that make a difference in one's life. You go and you apply immediately, and the knowledge is just amazing. There's another program we're bringing up at the beginning of October, November, which is called a mini MBA, and again that's a certified insurance, digital insurance, but from an MBA perspective. So it's aimed at senior managers to undergo that program. It's a 9 months to 12 months program, and again, corporate partners get discounted rates on that, members get discounted rates for that. So this is just another way to contribute towards professional development and making sure that the industry is future fit when it comes to skills development. For now, I'll pause there. I'll see you at the conference. If you have not registered, like I said, take advantage and register now. I'll see you soon. Thank you.
The 50th African Insurance Exchange, Africa's premier insurance conference, takes place online and at Sun City from the 21st to the 24th of July. Join me, Tumelo Mututwane, and the cream of the insurance sector as we explore the most topical issues faced by the industry in South Africa and around the world. There will also be plenty of time for networking and superb entertainment. For more details, visit www.africaninsuranceexchange.com. The African Insurance Exchange, bringing professionals together for 50 years.
Madam CEO, we wish you all of the best, as well as the team at CN&CO who sit behind the scenes and take an incredible conference to life. So I know it's very stressful for all of you, but it's always a huge success, and I don't doubt that it will be a success this year as well. Thank you for joining us, Thokozile. And now we've reached that time of the day where you can go and get a cup of coffee, a glass of water, roughly about 10 minutes of entertainment. Today we have a wonderful performer as always. So we here at InsureTalk support local talent and have done so from day one. We've seen unbelievable performances over the past 3 years or so. And today we have a wonderful lady from Cape Town, Senati. She's a dynamic and talented musician who recently graduated from the University of Cape Town. She specializes in African music and instruments, and she has demonstrated exceptional skill and dedication throughout her academic and professional journey. And if there's one thing that we like more than South African talent, it is young South African talent. So Senati, entertain us.
Hey, my name is Senati Hope, and welcome to InsureTalk. This is an Xhosa stick fighting chant that the boys sing when they're playing or they're fight sticking. Africa, oh, Africa, oh, banomoteba. Africa, Africa, yeah. Africa, Africa, yeah. Africa, oh, Africa, oh, banomoteba. Africa, Africa, yo. Africa, Africa, yeah. Zimkile como soba, oh, ma Africa, zimkile bo, zimkile como soba, oh, ma Africa, zimkile bo. Hey, so on my last song, I'm going to be playing this beautiful instrument. It's called Uhadi. It originates here in South Africa. It is a South African bow. I'm going to be playing Uthando Luphelile by Umama Dosini, the legend that introduced this instrument to us. And it's just to honor her as well. Uthando luphelile bo, mntaka mama. Uthando lundahlule yo, mntaka mama. Uthando lundahlule ye, mntaka mama. Uthando lundahlule ye, mntaka mama. Yeah no yo, yo yo, yeah no yo, yo yo, yeah no yo, yo yo. much for listening. My name is Sinati once again. You can find me on Instagram at Sinati Hope, Sinati_Hope, and also on TikTok, I'm Sinati Hope. Yeah.
I'm sure you can agree that we've, over the last, since the World Cup, we've had some goosebump moments in South Africa, and we have, I don't know, often a renewed appreciation for the wonderful spirit, the talent, the people of this country. And I believe that Sanati reminded us of that again today. So wonderful, and thank you for joining us to keep us a little bit entertained this morning at Sanati. On to our speaker lineup for the day. As I mentioned, all our speakers are here from Discovery Insure. We appreciate you, Discovery Insure, not only sponsoring us for this event, but also providing your top talent to come and share their knowledge with us. We have Yashin Modi, who's the head of Umbrella Funds and Technical Marketing, Discovery Corporate and Employee Benefits. And it is such a topical issue that we are going to be hearing about today. It's the two pots for two needs, and it affects every single one of us. Whether you are someone who is in the business of employee benefits, retirement funds, or whether you are on the receiving end of it as a policy holder, this is something that really affects, and some of us that's getting closer to the age are very, very interested. So I wanted to tell you about Yashin. Yashin is a qualified actuary and currently runs the retirement fund and technical marketing divisions of Discovery Corporate and Employee Benefits. He graduated summa cum laude from University of Witwatersrand in 2012 with an honors degree in actuarial science and mathematical statistics. That is something to be proud of. Joined Discovery and Discovery Invest in 2013. Subsequently became part of the founding team of Discovery Retirement Funds in 2018, and the only behavior-based umbrella fund in the South African retirement funding industry. He does have spare time, it seems, because he says he produces music and he performs as a professional pianist. To the producers here at InsureTalk, maybe we should have him entertain us on one of our musical inserts. Yashin, thank you so much for joining us, and we look forward to your talk, Two Pots for Two Needs.
Thank you so much for that introduction, and thanks very much for the invite and the pleasure of presenting today. Let me just see if I can get my presentation started. Maybe just a confirmation that is the presentation sharing?
Yes, it is. Thanks.
Perfect. Thanks. Like I said, really appreciate the opportunity to speak to everyone today. I wasn't expecting such a huge room here of almost 3,000 people. So, it's quite an exciting opportunity to speak to you all. As mentioned, I look after the retirement funds and technical marketing for corporate and employee benefits at Discovery. And I've worked in retirement funds for many years, and two-pot is probably the most exciting thing to happen. When people talk about retirement funds, it's not the most exciting topic in financial services, but now that two-pot is coming into play, it's a great thing to be able to talk about. Maybe a little bit of negativity around it in the industry. Is it really a good thing? What is going to be the impact? And so I thought I'd take the opportunity today to talk a little bit about, actually, what is it? Let's just remind us, why is South Africa in this position where we need to drastically change retirement fund legislation? What is it exactly, and what are the impacts from an advice, employee, and employer perspective? So to get into it, just make sure I can click here properly. So the why, just a brief agenda. I'm not going to take too much time out of your conference today, but a brief agenda in terms of why, how did we get here? What is it? Reminder of the two-part basics, and the what now, ultimately, what does this all mean? So I like to start off my presentations with this little bit of an image here. And I usually ask, to whoever I'm presenting, what does this image represent? And if we think back a year ago, this was the protest. These were the protests happening on the Champs-Élysées in Paris when President Macron changed the retirement age from 62 to 64. And for a lot of us in South Africa, we're like, okay, what's actually happening here? Why are people protesting? From our perspective, we have a generally accepted normal retirement age of 65. Depends on the employer we work for. But what is this nuance of changing 62 to 64, and why was there so much upset around it? Well, if we take a bit of a step back and let's assess what does retirement look like across the world? And the reason why the French were so upset is because most of the French belong to a government-funded defined benefits scheme, where by virtue of changing the retirement age from 62 to 64, essentially the French government is now promising the French people 2 years less income than they originally promised. So they're almost taking away 2 years of what they originally said they would give to everyone who was planning on retiring at 62. So a little bit of a nuance in terms of, South Africa's system has moved largely from defined benefits, a promised pension from your employer, to defined contributions. It's up to you to contribute, and your retirement outcome depends on your behavior in terms of how much you preserve and your investment growth as you move towards retirement. And speaking of that type of system, if you look at the US, let me just get my animations right here. So in the US, it's similar to ours. There's a social security net that exists for the lower income population and those who haven't spent or haven't saved enough. But then they also have similarly employer-based funding, what they call employer 401ks, which is similar to our employer retirement or umbrella funds. Then you have your individual retirement accounts, similar to our individual RAs, where people, if they feel like they want to save additional amounts above the employer contributions or employee, they can do that. China is sort of similar to the French in terms of that defined benefits, basic pension insurance, but they're also battling with this issue of increasing longevity, which was the ultimate reason why the French had to change their retirement from 62 to 64. Because people are living longer, defined benefit schemes are becoming increasingly unaffordable. Australia now, interestingly, is considered one of the leading retirement systems in the world because they mandate a 10% contribution if you're employed, and you cannot withdraw that unless it's for an emergency. So in terms of the extent to which the Australian citizens are on track for retirement, considered one of the leading systems in the world. I see there's some questions coming through. If the hosts, if there are any questions, just feel free to interrupt the presentation and we can discuss those questions. So coming down to our little area of the world, South Africa, what is unique about us? We are considered one of the most income unequal nations in the world. If you look at our Gini coefficient, which looks at the extent to which there's a disparity between low to middle to higher income earners, one of the most income unequal nations in the world. So what is two-pot? And if we said, let's put ourselves in the position of National Treasury, the South African government, if we had announced two-pot, what would we say to the country? So we put this little video together on the rationale behind two-pot. I'm going to play it now. We win, create, mine. As South Africans, we build and we achieve, but we have fallen short for ourselves. We are the world's worst savers. And understandably so, because so many of us struggle to make ends meet. So how do we balance the needs of today with the needs of our futures? Two-pot is the first step, balancing short-term needs with long-term savings. From 1 September 2024, contributions will be split into 2 parts. Savings accessible at any time, and retirement securing our futures. 2 pots for 2 needs in a country that can thrive. Discovery supports two-pot, and we support you as we create the growth story we deserve. So just a little bit of perspective on how we're looking at two-part, the immense impact it's actually going to have. So then we said, okay, let's take a step back. Oh yes, just a little bit of background in terms of, okay, was two-part really sprung upon us recently? Well, actually, it's been almost 10 years or just over 10 years in the making. 10 years ago in 2013, there was initial talks around two key ways of improving retirement outcomes: compulsory annuitization and compulsory preservation. The lack of preservation when people change employers and withdraw their retirement assets is one of the key behaviors that leads to people not having enough income in retirement. Compulsory annuitization is a nice way for people to manage that income in retirement. Instead of withdrawing all your assets at once when you reach age 65 or whenever you retire, you're forcing that requirement of having to purchase an annuity, which allows you to manage your income and last longer in terms of your final years from age 65 to, I think, the average life expectancy of around 85 to 90. So in the last 10 years, we call it T-Day and P-Day. So T-Day was introduced that mandated annuitization of provident funds. Then we entered the COVID pandemic, and the need for cash became ever more relevant. We even had premium or contribution breaks for some of our schemes where the retirement was deprioritized, and immediate expenses were now brought to light with the difficulties that the pandemic brought. But Treasury recognized that need, and they took the opportunity to blend that need for access with this original concept of mandatory preservation. So how do we, like as the video said, how do we balance the needs of today versus that ever-pressing need, which is often unappreciated so far in the future, but it's a very pressing need, where we're going to have this period of our lives where the only source of income we have is the savings we've built up. If not, now we have to rely on other people or state security or children. But ultimately, we want to be in that position where we can maintain the quality and standard of our lives when we reach retirement in complete independence. So that's a little bit of a history, why we think it's such a good thing for the country. I sort of built a little back of the envelope Excel sheet to say, okay, how much retirement assets do we actually have in the country? And what was that 10 years ago? So if you look at the chart on the left, we're currently sitting at about just under 5 trillion in retirement assets. And that started off at about 2.8 trillion 10 years ago. The crazy thing is that I started my little Excel on 2.8, and I projected that at, let's say an average contribution of 10%, 10% investment growth. The average employee turnover in the country is around 15%. And if you look at any Alex Forbes benchmark surveys, Sanlam benchmark surveys, only about 15% of people, when they change employers, tend to preserve their retirement assets. I projected that 2.8, and it somehow just landed up at 4.7, not surprisingly, in the sense that those are the industry assumptions. But I managed to replicate the growth of retirement assets over the past 10 years in South Africa. All I had to do then was say, okay, two-part is essentially saying that you can withdraw 1/3 of your savings, but the other 2/3 you have to preserve, regardless if you change employers. It's mandated that you have to preserve that until you retire. So essentially, you can change that 15% preservation assumption to 66%. So what does that mean? A simple change in the model shows that we would have had almost 10 trillion assets in members' retirement assets in the country, which means people's retirement outcomes would have looked twice as good if people were on track to replace maybe half their income in retirement, having to downgrade their lifestyles, rely on other people. With two-part in place, they would have been able to replace their entire incomes and continue living the lives that they've built pre-retirement. So to add the numbers to the situation, we think it's unequivocally a good thing. So let's also just take a step back and say, okay, we're talking about two parts. How many parts are there really? What do I have to preserve? Will my vested rights be affected? So let's take a step back and look at the two-part 101. What is two-part at its core level? So the way I like to think about it, two-part is essentially dividing your retirement assets into pre-September 2024, which is in a couple months' time, and contributions post-September 2024. Your contributions and investment growth thereafter of pre-September 2024 is now going to be referred to as your vested component. Your rights are not affected there. You can still withdraw those assets if you change employers, and it includes the investment growth you earn after that date. So no changes to your rights that you've built up on all those assets that you saved up until that date. That's a legal nuance that says we can't affect vested rights. So hence it's called your vested component. So now Two-Pot says we are going to split any contributions after 1 September 2024 into two parts. The first is called your savings component, which 1/3 of your contributions go into a savings component. The rule on that money is that you can withdraw that once every tax year at any time, regardless of whether you change your employers or not. It's almost like a savings account, hence savings component. But you still get the tax deductibility and tax-free growth on any of those savings, which means that when you do withdraw it, ultimately you were going to pay tax on withdrawal at retirement. If you accelerate that withdrawal and withdraw your savings component during the year, at any year, that's going to be taxed at your marginal income tax rates. What is the other 2/3? So the other 2/3 is now known as your retirement component, and that's where driving better outcomes comes into play. You cannot withdraw that component at any time before retirement, even if you change employers. So this is Two-Pot at its core. It says, we will not take away your rights before 1 September 2024. Going forward, we recognize the need for balancing the needs today versus the needs tomorrow. Hence, savings component accessible at any time and retirement component we cannot withdraw, ultimately creating those better outcomes at retirement. The one slightly confusing part, which makes people believe that, okay, I'm going to be able to access all of my money on 1 September, what they're doing is called seeding. They don't want to have the savings component have to start from zero and you have to build it up to have a withdrawable savings component. So what they said is, we're going to transfer 10% of your vested component into your savings component, capped at 30,000. And we're going to calculate that, or all of us as retirement fund providers need to do that calculation on 31 August 2024, which happens to fall on a Sunday. So we'll all be working on that Sunday. And it's going to be capped at 30,000. And it applies per individual contract that you have. So if you have a employer-based pension, provident, an RA, a preserver with different providers, everyone is going to be seeded in a sense that 10% of your vested is going to be transferred into your savings, but not to fret in the sense that if you don't end up making a withdrawal, your rights are not affected. You still get your tax deductibility, tax-free growth, and ultimately the benefits that leads to in terms of extra compound growth as you move towards retirement. So that's Two-Pot at a high level. I did have a couple slides on over 55s. It's a little bit complicated in terms of a lot of questions in terms of why is there dispensation for over 55s in terms of allowing them to opt into Two-Pot or not. It is quite topical. I've gotten a lot of calls on this. So the over 55s are allowed to choose whether they are part of this Two-Pot world. And the reason for that is because they over 50, and it's not just over 55s in general, but if you were over 55 on 1 March 2021, because you had the right to withdraw your provident fund savings as a full lump sum at age 65 or whenever you retire. And they don't want to take those rights away. So what they're doing is they're saying, if you were over 55 and part of the same provident fund, if you're over 55 on that 1 March 2021 date, we will give you the option of choosing whether you want to belong to Two-Pot or not. And the reason is because there are several disadvantages and advantages. I won't go into too much detail now, but feel free to email me after the session. I can share the presentation. If you have any questions, just email me directly. There are several disadvantages and advantages in terms of if you need access to cash and you opt in, Two-Pot gives you that. If you don't opt in, you don't have access. But now if you come to changing employers, if you've opted in, you won't be able to withdraw your retirement component. If you haven't, now you'll still have full access. There's also little nuances on immigration because they've aligned the immigration retirement rules to the retail space in a sense that the day you lose your South African residency, and you have to now wait 3 years before you can access any retirement savings. So a little bit of a nuance on that. And we've also launched a few weeks ago a Discover two-pot hub where we have a calculator that you can go. It's available to all South Africans where you can go and calculate, if I had to make a withdrawal, what would the impact on my retirement outcome be? How much would I have missed out on? And we sort of give you some solutions in terms of, okay, how much extra would I need to contribute? Or alternatively, which most people don't want to do, how much longer post 65 would I have to work? And we've received excellent feedback on this calculator, the first in the industry to launch a calculator like this and say, okay, if I'm genuinely considering making a withdrawal, what would the ultimate impact on my retirement be, and what are the possible solutions to close that gap? To wrap up, and maybe I'll defer to our wonderful hosts in terms of if there's time for questions, but the what now? What does it actually mean for all of us in the employment space and in the advice space? And yeah, I mean, how is it gonna affect us in the long and short term? Well, in the long term, what we're gonna see hopefully is fewer resignations. You're gonna have more sticky workforces by virtue of the fact that there were people in the previous regime that used to literally resign from employment to be able to access their retirement money. That was one of the key things that led to the advent of two-pot. It's because to curb this behavior and this need for access to money that drove it to the extent that people were resigning to access their cash. So hopefully over the long term, we're going to start seeing fewer resignations, greater engagement. As I mentioned at the start, this is one of the most exciting things that have happened in the pension and providence fund space in the last 20 years. So it gives us also the opportunity as retirement fund service providers to host webinars like this, to talk to everyone about what two-pot means, what is the potential impact, and also improved productivity, which we ran a little survey on two-pot to see what are you actually planning on using your savings pot withdrawal for. Well, a great thing, given the current high interest rate environment, is to possibly use that withdrawal to settle some debt. So almost 60% of respondents of almost 3,000 votes cast said, yes, I'm planning to use it to settle debt. But concerning is that almost the other 40% said, I'm going to use it for my day-to-day expenses and for travel, which we need to remind ourselves, this is ultimately still sitting in a retirement funding context. So do I really want to use this for my retirement savings to manage my day-to-day expenses? This is where individual level advice comes into play. Okay, how is my overall financial picture going to evolve if I ultimately do that? But then let's finish off on the short-term impact. It does mean that because the way two-pot is structured, your retirement fund service provider is now going to have an exponentially more voluminous claims experience. Claims we used to administering between 1% and 2% of members per month because of two-pot and because of the fact that everyone now has access to their retirement funds. We did a calc that says that if we had to accommodate the number of withdrawals that are expected in September, we would have to increase our claims administration team in the order of 40 to 50 times, i.e., if we were employed 10 people, multiply that by 40 to 50, and that's the claims team we would need for that month, but thereafter no longer needing that bigger team. So the obvious solution is we have to build straight through digital automatic processes that minimize duration of claim and make it as efficient as possible for people to withdraw their money. But what does that mean? Your retirement fund service provider has to be ready to do that. Because of that, we have to be able to verify who we're paying. So SARS has said that these withdrawals are going to be taxed. And there's a possibility that if you owe SARS any tax, they can deduct that from your savings pot withdrawal. So what we need to collect is your tax number, your cell number, and you have to have your ID and passport number on hand to be able to minimize that delay when you ultimately put through a savings pot withdrawal. But also, you need to be with a retirement provider that is in that position to be able to validate that the right people are requesting the right money. So that's things to think about on your savings component. But maybe a little bit more on the positive side, it gives us the opportunity to create much more engaging platforms, to rethink the way we design retirement benefits. Retirement is no longer just about retirement. It's about managing your day-to-day, managing your debt, speaking with your financial advisor to see how can I build this new system into the uncertainty and financial uncertainty that today's world is bringing. Especially since COVID, we saw the 30% dip in stock markets, this massive inflation spike that driven from the US and supply chain disruptions throughout the world, commodities supply chain disruptions in China. So the world is increasingly uncertain. And so how do I build two-pot into my financial plan? And how do we take that opportunity to now make retirement fund savers, members, even more aware about what is arguably probably the most important element of their financial plan as they navigate towards through their careers. So I think I'll end it there. I actually did want to just give you a little bit of a demo of the two-pot calculator on our website. If you go to discovery.co.za, got a nice little animation explaining what two-pot is about. Let's say I just want to enter my current age, how much I have saved, and how much I'm currently contributing. Just click there. It says, oh, I'm going to have about 30,000 Rand access in my savings component. Let's say I want to withdraw 20,000 of that, and I currently earn 50,000 Rand per month. Okay, calculate my net withdrawal. A marginal tax rate will be in the region of 36%, which means 20,000 withdrawal request. I'm only going to get 12,000 after fees and tax. Maybe I need to reconsider this. But at age 65, it would have been just worth over 500,000, which makes me think even more. Maybe I'm better off leaving this in my tax-free retirement savings vehicle. If I really want to go through with it, what are the levers I have to pull? I could contribute an extra 100 Rand per month, or I could work an extra 4 months after age 65. So it's all about, we're not trying to dissuade withdrawals. We're also not trying to encourage withdrawals. But our narrative at Discovery is make as informed decisions as possible about your two-pot savings and your retirement savings as in general, because we truly believe that your retirement savings and your group cover are probably the leading components of the majority of South Africans' financial plans. And now we have the opportunity to really raise awareness around that and encourage people to make good decisions. So thanks very much. I'll hand over back to the presenters, the hosts, if there are any questions.
Yashin, thank you so much for that. It was really insightful, and we appreciate the time you took to prepare that and be with us here this morning. Now, every month we have Reinsurance Whitehead, who tells us about what's happening in the media in the insurance industry, long and short-term insurance industry. Reinsurance is known to all of us. She's the co-owner and the editor of FA News, and she is the brainchild behind the Insurance Apprentice. I'm very excited to see how the apprentices from last year and this year are just continuing to do amazing things in our industry. Claims forums and just, really just continuing their journey of staying in the public space, sharing their knowledge, getting people together. So I know Reinsurance is also on her way to the conference at Sun City. I'm sure we will hear a bit about that. Over to you, Reinsurance.
morning, everyone. It's an honor to be here once again. A little bit earlier this month, but I think we are all looking forward to the AIE conference, so we are not complaining. I want to start this time with the Insurance Apprentice, and I'll end with some industry news. You know by now that we have celebrated year 10 of the Insurance Apprentice with a group of well-balanced, fairly entertaining, and out-of-the-box thinkers as part of the top 10 this year. They paved the way like none others before them to enable the brand and the competition to go to the next level. So, some of the developments. We will continue sharing the episodes on YouTube and Facebook like always before, but we are in talks with the television station to take it to the next level, which is television. If our talks, which are in a fair advanced stage, are successful, we will be on television next year. We've also lined up our headline sponsor, which is a crucial part of the process. And as soon as we have the final yes, we will share the big news. It's all very exciting, so make sure you keep an eye open for this news. I would like to add that we will also increase the prize money for the winner significantly next year. And with that, we do hope to attract more senior professionals under the age of 35. For now, it is 100,000 Rand, but my aim is somewhat higher than that. And I do believe that that will convince a few people. Wait, before you go and enter, just listen to the chat further. The trip to Lloyd's will also still happen, although we always first need to get the final confirmation from Lloyd's, which often only happens after applications have closed. Marsh will most likely add to the trip with an additional bit of fun and business, but we'll share more detail around this later. Did I mention that the winner normally also wins a travel voucher? And this will also increase this year. Detail to follow once I have confirmation from a very kind sponsor. So you win all of this on top of an exceptional personal and professional growth experience, a whole new network of people you get to know, and quite a few additional wins. Back to year 10 and what evolved after that. Next week, we will share our very first podcast called TIA Talks. One is sponsored by Sazria, and I thought I'll share a quick snippet with you. Quickly listen to this.
What does it actually feel like to be the winner? How you articulate it, how you conceptualize it, and how you deliver it.
For me, my strategy was just make it as far as you can.
Amongst the top 10 that we were, I'm still friends with every one of them.
Tell me, what do you think? Because you can't prepare for what the Insurance Apprentice actually throws at you. We doubted you.
Yeah, but
doubted as in past. Yeah, past tense.
That if you don't make it to top one, doesn't mean that you can't add value to the industry. By all means, you made it that far. You can continue to contribute.
Were those real tears?
Those are real tears.
You can be honest with us, Tema.
Those are actual real tears.
Mersey's idea framework and was conceptualized here in TIA is fantastic.
We'll share this on our socials and also on a few podcast platforms. Don't miss out. And you will only hear about it if you follow us on our various platforms. We are also launching the TIA alumni chapter with final talks on what that actually means happening in the next few days. I'll share more about that in the next edition of InsureTalk. But once again, another great reason to enter, because being part of the alumni chapter will have its own advantages. Cool. Over to FI News. It's incredible how many people I bump into who compliments us on what we do for the industry. Never have I received the amount of feedback, positive feedback, than what we get now. Our daily newsletters, spot on. The CPD articles, really great content we are giving our readers. And yesterday again, someone mentioned that he's doing his CPD through us and that he's actually amazed by the content and that he reminds his team that this should be a regular read and not only because we have to do CPD. Our content is really of a high standard and we take that job very serious. It's our aim to keep the standard high, and it's incredibly important for us to keep people updated about industry developments. So over to some industry news. The economic landscape has influenced the insurance sector like any other sector with increased demand for more affordable and flexible insurance products. Many clients are seeking coverage options that can adapt to their changing financial situations, prompting insurers to innovate and give clients something they can customize to a certain point. We have to acknowledge that technology is a major driving force, and the impact and influence of technology will most certainly increase. So if this is still making you uncomfortable, you have to accept that the pace of change will increase as time goes by. Customers today expect seamless, digital-first experiences, and they want to be able to manage their policies, file claims, and get support through their smartphones, and of course with the help of their brokers. At FI News, we've been closely monitoring these industry trends and reporting on key developments. Some of the recent highlights include regulatory updates, technological innovations, and market trends. Don't miss out. Like, subscribe, register, and follow. I think I've mentioned them all. In conclusion, stay informed, embrace innovation, and continue to provide exceptional value to your clients, whoever they are. Thank you for your time. And for some of you, see you at the AIE conference in a few short days. This is me, Rianet Whitehead, FI News editor and founder of the Insurance Apprentice, signing off.
CN&CO Events proudly brings you InsureTalk Live. The time has come to close your laptop and join us live. Network with industry leaders and influencers. Engage and learn from A-list speakers. Interact with top exhibitors. Experience the best live entertainment and so much more. Register today. Visit cnandcoevents.com. InsureTalk Live, shaping the future together. Register today.
Thank you, Rianet. And just like that, we're at the end of this session of InsureTalk. We've also reached halfway mark of the year. We are very close to the end of the year. If you haven't booked your holiday home yet or your trip to the Cape, you're almost out of time. That's how close we are. Now, before you leave us, just hang on a minute because we need to talk about InsureTalk Live. On the 19th of September, we have a live event in Joburg at the venue, Melrose Arch. There's only 100 spots available. We had the first inaugural event last year. It was a huge success. And we hope to see you there. So I mentioned our super fans. Please join us at the event. if you want to book tickets, you go to the CN&CO events. CN&CO. Let me get that right. CN&CO events.co.za. The producers will pop the link into the chat. Please book your seat and join us in person. And for those who are joining us from around the country, don't fear. The event will go ahead as usual. It will just be live. So you can still join us virtually and share in some of the live event excitement. So that is something that we're all very much looking forward to. I wish everyone going to the conference a wonderful conference. I hope you make amazing professional contacts, that you are professional, that you enjoy the speakers. I know there's a lot of time and effort that goes into putting together an incredible speaker lineup, and that you enjoy the fun, because that's really what makes it so amazing. And on that note, it's the end of the session from me. I wish you well. Thank you.
CN&CO Events proudly brings you InsureTalk Live. The time has come to close your laptop and join us live. Network with industry leaders and influencers. Engage and learn from A-list speakers. Interact with top exhibitors. Experience the best live entertainment and so much more. Register today. Visit cnandcoevents.com. InsureTalk Live, shaping the future together. Register today.